Morning, everybody. Welcome to the Flow Show. It's a new week. We are pretty much halfway through the year, and what a fun half it's been so far. Morning, lads. How are you doing?
Very well. Good morning. A lot of
Good
stuff
morning.
happening over the weekend, but all
Yeah,
good, I
just
think.
another quiet weekend in the world.
Yeah, no, all good here. We had the Greek elections and a final election, so the governing party, which is kind of a center-right party, won by a landslide, which is
Yeah,
good.
flew through. Yeah, I
Yeah,
saw
yeah,
that.
yeah, which is great because they've done a really good 4 years, and we're going to get another 4 years of stability, which is what the country needs. So we're very happy about that.
Yeah, long may it last, mate. Long may it
Yeah,
last.
yeah.
Morning, Kay. How you doing, mate? Is he there? Is he there?
He's here, but he's muted.
He's muted.
It's okay. There he
Okay.
is.
Good morning, everybody.
Hello.
Yeah, so you guys are holding the euro up then still.
Oh man, I don't think Greece.
Greece.
I don't think
buy
we're able.
euros.
I don't think we're able to hold the euro up. We're definitely able to bring it down, but to hold it
Mhm.
up, I'm not sure.
Yeah, there was a time they couldn't hold their trousers up over there, but we won't go into that. Way back when. Right, well, let's kick off today's show, getting into the thick of it. Now, there's been a headline dropped by Bloomberg saying that China has stepped in to support the yuan after the recent weakness. I'm not so sure. They're citing the latest fix, which came in at around about 720. They said that that was at the very high end of where the market was expecting, and well, at the very low end of the market was expecting. Hence, an indication that maybe they're starting to put the brakes on. I don't really read into that situation. It's been going up, tapping up to 724 at the moment. There was a bit of a holiday last week, so maybe you could say they are fixing it a bit low at 720 when we'll be running the 721, 722s, but it's not too far off. If we start seeing them holding it around the 720s, 721s compared to where the actual price is, that might be a different kettle of fish. We have to remember also this is they fix on USD CNY, not CNH, which is what we can actually trade. So as you can see there, we're up at 721s on that one. Oh, hang on, is that live? Yeah, it looks to be live, even though that's the ICE measure that I look at for that one. So they're up at 721s near 722s for that one. That's where they fix it on. But as far as the CNH is concerned, it's still looking very strong, USD CNH, and I'm certainly looking for a further move up. I have been saying though that if we get into this area, get in around the 725s, maybe higher, break above this area, I think the risk that we do start getting some jaw boning picks up and increases, and certainly definitely if we get up towards 730, I think that becomes a risk. So what I'm looking to do with my position, my longs, is if we get up above 725s, I'm going to start pulling my stop really far up behind it. At the moment, it's sitting just above entry at the moment, but I want to get that right up. Do you think we might be close to then throwing in a bit of jaw boning, Kay?
Oh, it's possible. Well, for example, we had this stuff overnight that two more construction companies missed their bond payments also, right?
Yeah.
I don't know. I mean, the direction for the stuff is still relatively clear. Jaw boning, okay. Stopping it, well, they have the power, of course. I mean, $3 trillion say that they can hold any market that they want, but I think for now, I think it's as you say, this our safest bet now with longs dollar China is to gradually move our stops up, and then we let them do whatever they want to do. I was thinking this morning, I said that, well, should I take some off, because if the Japanese MOF decides to intervene, the rest of the dollars can have like a little bit of a setback in sympathy, and we may see dollar China trade perhaps back under 720 and load them up there again. But it looks to be just still only verbal over there. So I think the market is still very well oriented. I see Khaled saying like I guess that's dollar China that Khaled is talking about at channel resistance. I've got it up at about 725, but we may be looking at a bit of a different channel there. Oh yeah, okay. I've got it up in the 725s. I'll show it in a bit. But I can see what you're looking at actually. No, so this is one where typically we have to let them do right and tell us what they want to do. So if you want to play it really safe, I think 719 is pretty cool right now. To put it up there, we had this hold of 716. We may say like, oh, put it up at 716, 715 or so, but I think this is, if you want to stay safe and get some decent revenue out of this, you either take some off if we see 725 and then and then start to reload if we see we move lower back down to 720, for instance, and then let it go. Now the overall situation, I'm not sure. Looking at the rest of the dollars, I'm not sure if we can get and break back above those prior highs that we saw in the 737s. Those were big targets in those days when we went up there. So I'm not sure whether there's enough power to get up there. And looking at the EM around as well. I know China is a different animal, but looking at some of the EM currencies, the next 1 or 2%, I think well, me at least, I'm going to probably take what I've got and make a runner and then reassess.
Yeah, no, I agree with that. And yeah, there were two more builders effectively defaulting on debt. They're joining a long list, and China has said they're going to put in measures to support the property market. So it's not the big worrying headlines that you would expect in most times. This has been obviously going on for, must be coming up to a couple of years now, this property stuff. And we know they like to let things go on that anyway. So yeah, keep an eye on it, as you say, and you can look at this one, as you say, Kay, in a bit. But yeah, for me, if we get up above this 725 area, I'm going to be thinking maybe we're going to start getting some additional jawboning. And you're absolutely right with the intervention possibility from the Japanese side, hitting dollar pairs, hitting obviously, China yen as well. So yeah, something to keep an eye on that one, and hence why managing with stops is probably the best option.
Yeah,
but yeah,
now that we're talking about those interventions, or possible or whatever interventions, it looks though that is the closer we get to 145, the more nervous they get over there. But they also see the yen weakening without the other dollars really ramping higher apart from the CNH, right? I think if we get some real, let me kill my squawk, if we get some real interventions, we may be in a scenario where the rest of the dollars will go down in sympathy, but then they will provide decent opportunities, because it can have a completely opposite effect interventions, right? If you put your dollar yen lower, but the market still needs or wants a part of their dollars for portfolios, they're going to probably stick their dollars in other pairs. So it's sometimes a bit of a controversial or contradictory move in other dollar pairs. So after a first blip, so that's something I'm keeping in mind right now with the rest of the dollar pairs.
Well, let's hope they hold off this week, because we have got obviously end of month and a quarter and a half year coming in, and that brings with it enough shenanigans of its own we can see during the week. So let's hope they steer clear of that one. But yeah, I'm going to touch on some of the comments that have come out, because we have had them stepping up on the rhetoric. For example, the named top FX diplomat, Kanda, said that we'll respond to FX moves if moves become excessive. FX should move stably and reflecting fundamentals. Then we had Finance Minister Suzuki coming out, and just a bit of a step up in rhetoric, saying we will continue to watch the FX market with a sense of urgency. That was remarks to Gigi, and they said we'll respond appropriately if there are excessive moves. Then early on this morning, Chief Cabinet Secretary Matsuno said that it's important for FX to move stably, reflecting economic fundamentals, closely watching FX move with a high sense of urgency. So another use of that term. Also said that FX moves are sudden and one-sided being seen at the moment. So again, another step up. Now, as mentioned, a lot of eyeballs thinking that 145 is the magic number for those guys over there. NAB, head of FX strategies, said that it's quite likely that they'll see intervention with the yen at 145 to 150. So seeing a bit of a quote you could drive a bus through on that one. But yes, we are starting to see a pickup in the rhetoric over there. When we start getting the speculation lines being thrown in, that will get us ever closer to. But as for numbers, I'm not so sure. You know, we've spoke about this before. They don't tend to put a number on it. It's the speed of the moves and how they reflect versus other currencies, as Kay mentioned. You know, we could get to 145 and they won't intervene if it takes 2 weeks to get there. If it takes half a day to get there and further, and then we see another move after that the next day, you know, 200-300 pips a day, that's when we're stepping into the real volatile stuff and when they look to step in. But we are inching closer in terms of the jawboning towards intervention. How far would you put us away from that, Kay, intervention wise? I don't think we're seeing the moves just yet.
No, it's I think we're two steps away. Out of line with fundamentals and the speculation. I mean, they used to have a very clear very clear steps and graduation for the intervention. It was like really quite clear how they would do it. Yeah. But with the over the years, they have changed it somewhat, but still there is if they talk about speculation, then we are really very close. We used to have the last thing where and that's supposed to be confidential, but it was like when they were checking rates, that was really the last step before interventions. If then the market moved against what they were trying to achieve, then it was intervention time. But now it's probably two steps, yeah, speculation and out of line with fundamentals. That's probably going to be it. Can they do it before? Of course they can do it before. They can come in and surprise the markets. There's also an interesting fact that we need to notice is that Ueda is in Sintra, Portugal this week, especially on Wednesday. If we get any headlines saying that he's not going to participate in the ECB forum, that may be an extra indication that they are really very close to interventions. And yeah, the levels, they've never really put a level on the dollar yen interventions. They never had a red line. The market is speculating because of probably amplitude of moves or so, and that's where they first intervened from, right? 145, 46.
Yeah.
No, I'm not going to speculate on it, but if we are at low 143s, if you print 145 tomorrow, they will probably intervene, and the market will say, like, you see, I told you so, but that's just because we did 200 points in one session. So yeah, I wouldn't hang my hat onto the 145.
Do you remember if we got the before the last intervention? Did we have the BOJ ringing around headlines? I don't recall we did, but I can't remember.
No, but we had one day. But But we had one day, and they were like really talking about a lot of stuff at the time. So it may have been how shall I say, drowned in the rest of the comments. So
yeah. Yeah, because as Kay mentioned, it is one of their old plays that you suddenly get a headline popping up saying the Bank of Japan is phoning around banks checking rates, and as he says, that used to be one of the steps, but I can't remember getting it last time. But things can change, you know. We only go off the old playbook, and Japan usually keeps their playbook pretty steady. But you know, we're in a new world. They might change things up if they could pull out a surprise and completely change it. But we'll have to wait and see. But we'll keep an eye on it. We're keeping our ear on the comments coming out, and we can usually tell if they're stepping up importancy, shall we say. And while we're on the BOJ, there were the summary of opinions, which is sort of like secondary minutes of the last Bank of Japan meeting, where you get to hear all the different parties and what they said. Apparently, one member has called for an early revision of the YCC at the June meeting. So they're looking for potential changes there. Some in the market are spinning that to mean that something's going to be cooking for the July meeting. There was also half mention, that prices may stay higher than 2% over the fiscal half year. That was the time when prices were set to start coming down below 2%, according to Eurida and expectations. But there was a bit of chatter in there about the potential for inflation staying higher, staying stickier, as seen in other countries. I think that may be the case. We're going to continue to see sticky inflation in Japan. I doubt we're going to see the 5, 6, 7% of everywhere else, but you know, just staying above 2% is a big deal for those guys over there. But we shall see. Fiscal year end is, I think, another couple of months away, isn't it? April. May.
Fiscal year end is end of September. Sorry.
Where are we? April.
End of September.
End of September, beginning of October. Yeah, so we're a few months off of that. So we get a few months to see what inflation does in the meanwhile with that lot. Right, let's move on swiftly. Then I can bring Stel in and the rest. So over to the Bank of England, and hike expectations took off further on Friday. Some traders took the peak rate for the BOE up to 6.25%, which would be the highest since 1998. They brought in the peak when that would hit a peak from February next year to the year end this year. I think that's getting very punchy now, getting over 6% for bank rates. Pretty much every bank hiked up rate expectations last week. Some calling for 50s at the next meeting. Some calling rates up 5.75, 6%. I think that is getting very toppy. So we could be finding that the pendulum is starting to swing into extreme pricing for Bank of England rates. That isn't really reflected in the pound entirely, though some pound pairs are still remaining bid, like sterling yen. Obviously, a lot of that is to do with what's going on in the yen. Cable's not dipping too far back as yet, you know, still hovering around, looking maybe at another crack at 128. That's certainly not out the frame. So yeah, well, I think we're getting in extreme price moves now. So I'm going to be keeping an eye on the euro sterling to see if we get a move. I've still got some bids in down in towards 85s. Looking to pick some up down there. The Bundesbank apparently may need some recapitalisation to cover its bond buying losses. So writes the FT. So obviously all the QE stuff that's being held by central banks is now getting crumpled on the rising yields. So apparently they may need some recapitalisation for all that. So we're now bailing out the central banks apparently. What do you make of that, Stel? Must be music to your ears, isn't it? That it's the Bundesbank that needs a bailout now rather than the Greek banks.
Well, first of all, let me make a few comments. Yeah, let me make a few comments about stuff you talked about so far. So
Yeah, come on,
the BOJ, I think we are getting very close to some kind of intervention now. The change in tone and rhetoric. But I do agree that it has to do. It's all about the pace of the FX pairs moving. If the yen depreciates slowly, they're probably gonna be a little bit more lenient, let's say. But if it starts going in a more dramatic way, then they're going to be straight in, I think. You also mentioned governments trying to support housing markets. I keep hearing this, and it makes my blood boil, because what has the main trend been in home ownership over the past, let's say, 20, 30 years? It's becoming more concentrated, right? And there's a lot of corporations that own real estate assets, and they rent them out, they do whatever they want. And basically, it's becoming more and more difficult for first-time buyers. You guys in the UK know this very well. To get into the housing ladder or onto the housing ladder. So when I hear about governments, trying to protect the housing market, if prices, let's say, went down 50%, who would it hurt most? It would not hurt most the average person. It would hurt most all these, the top 10%, top 5% who own crap loads of properties, and obviously the royals and all those who own pretty much all of London. But if prices go down 50%, that would be great news for the majority of, let's say, the bottom 50%. But of course, they don't want to do that. They want to keep the status quo. They want to make it even harder for people to buy a house if you don't have the cash, or if you don't have it from your parents or whoever. And I don't get it, why they want to eliminate a part of the cycle, which is a healthy part of the cycle. That's how things should work. Anyway, just wanted to vent a bit and let that out.
Go ahead, mate.
It's crazy. And I have friends who are looking to, they have a son who's about to go and study in London, and they're like, we're looking to buy a property, and the prices are incredible. It's like buying in Monaco, it's really tough. But anyway, that's how things are, and I think that's how they are in most of the Western countries. It's not just the UK, or we're seeing this in Greece as well slowly. But anyway, and then coming to the BOE and the Bundesbank and all that, I want to repeat, I think the pound is going to be a currency that's going to be outperforming. I'm not saying it's going to be flying, but I think it's going to be outperforming in the next few months, basically due to the central bank divergence. And we're seeing this, any sell-offs in the cable or rallies in the euro pound, they're getting sold into at the moment. I do think that the euro pound has a target of 83 to 83.5. I've said this from basically when we go to 90, and I think we're slowly going to edge there. And the cable, I am constructive, especially given that I am medium-term bearish dollar. But overall, the situation is difficult everywhere. The fiscal situation in UK, Eurozone, the US, everywhere. It's really difficult. And it's, we are seeing a short-term reduction in the M2 money supply in the US, and everybody's panicking. Oh my God, this is the first negative move in, since the Babylonian War, or I don't know when it was. But, the main trend though is deficits are there. They're there, and they're massive. And okay, maybe central bank, maybe they're offloading their their bond holdings, but they can't keep doing that, because they need to fill this hole which is generated every year from the deficit. So in the short term, yes, you were seeing this these moves in the deficits, sorry, not in the deficits, in the money supply, etc., etc. I think governments have no alternative but to go back to buying bonds, and because there's no other way they can do it. The deficits are just too large at the moment. So what do I think about fiscal policies and debt going forward, and inflation? I think we're going to see the same that we've seen over the past 20, 30 years. Okay, there's going to be some ups and downs and the readjustments here and there, but the trend is still the same. So I'm sorry to be so pessimistic, but I just don't see any way out of this unless governments stop their spending, or maybe not stop their spending, control their spending relative to what they earn.
Yeah,
it's as simple as that.
Well, if I
sorry,
that
was a big rant. I'm sorry, but
I was going to say, if I wanted to sound really pessimistic, I'll get Steve on, but we'll save him for a show later on today, I think.
Yeah. By the way, Mike is saying, square the circle, UK stagflation, bullish pound. But for the next, as I said before, for the next few months, I think the pound is going to be probably outperforming the other major currency. And it's already been doing that. I just think it's going to be continuing just a little bit further in the medium term, going up to, a year forward or 2 years forward, who knows?
Yeah.
I don't know.
So that would mean you're largely bullish, or I wouldn't say bullish, but maybe more optimistic about UK fundamentals than you are over the rest. If you're bullish liquid.
Yeah.
Cool.
For now. Okay. Obviously, nobody knows what happens in 3 to 6 months from now. Nobody knows. Well, I mean, they make their forecasts, but they don't know either.
Well, 3 to 6 hours away these goldfish markets go sometimes. So you never know. Right, just coming into some data. We had the IFO out this morning. That came in weaker than expected at 88.5 versus 90.7 expected. All the other measures as well coming in lower. The IFO said that the share of companies that want to raise prices has decreased further in June. So some inflation pressures waning there as well. They said that it's the likelihood that the German economy will shrink again in Q2 has increased. Also, you can see there Spain PPI year-on-year numbers in there coming in much lower, minus 6.9%, much lower than expected, minus 4.5%. So again, those inflationary pressures waning a bit in some of the numbers coming through there. Over to the ECB. ECB's de Cost says we still have ground to cover. We will raise rates again in July, but not possible to say what we will do afterwards. We cannot anticipate the outcome of meetings beyond July. So July is getting nailed on there. ECB's Lane, again, going against some other ECB members because he's not seeing a wage price spiral. Says it's more like an inverse spiral. He says wages inevitably need to catch up and that will slow disinflation. That's largely against what some of the German central bankers have been saying, where they are potentially seeing wages going up and becoming a bit of a problem. We had Nagel mentioning some of that last week. As Kay mentioned, we have Sintra in Portugal, which is the European version sort of Jackson's Hole, as I like to call it. So all the good, the bad and the ugly are appearing there this week, just in case you hadn't heard from a central banker for the last 5 minutes. In our chat room, Kay's put up the full schedule so you can see who's speaking when, but that's going to be running this week. That starts later on today at 6:30 UK time, so I think 7:30 over there, with Lagarde's opening speech at that point, and then I think there are a couple of speakers later on this evening which are all available live via the web and whatnot. Fed's Bostic says that the inflation rate is too high and getting it down is a top job. The Fed has some space before mandate goals conflict. Remember, the Fed are on dual mandate, maximum employment and stable prices. But he favours no more rate hikes for the rest of the year. Fed's Daily says 2 more rate hikes this year is a very reasonable projection. It says 2 more hikes is only a projection. We don't know for sure. It's prudent to slow the pace of policy tightening as the destination nears. So taking a leaf out of Powell's book there. And back to Friday, the dollar got a little bit of a lift after we got the PMIs, the S&P Global PMIs, not the ISM. Manufacturing went further into contraction, like we saw elsewhere on Friday. Services pulled back a little bit to 51.1. The market took that on the whole as not as bad as what we saw in Europe, and that helped give the dollar a bit of a kick, give yields a bit of a kick on Friday amid those moves. So some decent data moves coming in again on that. And I suppose we need to talk about, if I get his name right, Yevgeny Prigozhin, and the stuff that happened in Russia, the real strange stuff that happened in Russia started Friday night with this Wagner guy apparently kicking off and steaming towards Moscow as a coup, but that's all gone by the by. Apparently Putin declared him a traitor and a mutineer, but apparently that all washed out, and now he's heading off to Belarus. But I think there's more fallout to come from this. I'm not sure if it's good news or bad news. This guy's a bit of a nut job, so I don't know if sending him to Belarus, where they've just delivered a load of tactical nukes, is the best move. Might be a case of better the devil you know. Markets had a little bit of a tiny flap, oil markets and risk markets and that, but I'm really not sure what to make of it. What have you guys seen on this?
It's probably got the Belarus arranged everything. So I think
he's a good mate, isn't he?
I think Putin and whatever the other guy's name is. I have a problem to pronounce it too. So and I actually forgot how to pronounce it. It's just we have to know they know each other since early 1990s. So
yeah, 20,
they have
30 years.
A bit of a history, those guys, and he's just a guy. Probably there's been a few bags of money exchanged, and that was it for that. Because they, as fast as they were moving on to Moscow, as quickly they stopped it and back to base. So. I don't know. It's all speculation, mate. What's going on there? See speculation that it was all arranged to put pressure on Putin's head of military. Seeing it was all arranged for the guys just to have more money, and what else? And then the opposite. You know, it's a real coup, and Putin is gone. I mean, no. I think that is for sure a no. Now, does it weaken Russia? I think it just weakens the front in Ukraine because of the Wagner group being the more violent and showing the more tenacity to defend and to capture cities. So that may be the only result of it. That's what I read in it. And for the rest, I refuse to read too much in it.
Guys, I think I read something on Twitter, it was really funny. It's like, if you want to raise, you're an employee, you want to raise, you go to your boss's office, you ask for a raise, right? So this guy, this is what he did. He took 100 tanks and a few thousand troops and started going towards his boss's office to ask for a raise. And he got it in the middle of the trip. So he's like, okay, I got it. We're going back. I mean, I don't know what to make of it. It's just too many question marks, and who knows?
Yeah, it was the fact that Putin came out calling him a traitor and a mutineer. Now, 5 minutes later, he's there. Oh, I don't know if they're best buddies or not, but he seems to have gone back on that rhetoric. I don't think it strengthens his hand in all this.
If Putin calls you a traitor, then usually 10 minutes later you're dead, your family's dead, your cat's dead, everybody's dead, right? But I don't know. I don't know what to make of it.
Yeah, it's a difficult situation to try and work out. But the thing is, if Putin if there is some sort of coup over there, what the chances we get some more hardliners or someone harder with a harder line than Putin has at the moment? I think that's probably the big risk for the market. I can't see it going the other way, and we're getting in some more Western friendly type leaders. So.
Yeah, better the devil you know, right?
Yeah, exactly. Better the devil you know than the one you don't. But anyway, a weekend coup for our news drop over the weekend. So keep an eye on that one, see what goes on. Right, quick look at what's coming up this week. As mentioned, we've got Sintra coming in. We've also got, as mentioned, quarter end of month, end of the first half of the year, which can be a busy time when everyone needs to rebalance the books for half-year reports and reset allocations and whatnot. So it's going to be important to keep an eye on the clock. Pretty much every hour we can see action, and obviously around the bigger fixes like the ECB fix, the London fix, Tokyo fix, that sort of thing. Keep an eye on for moves there. If you start seeing strange moves, you know, price is not doing much, and then suddenly you get a spike or a dip out of nowhere, just have a look at the clock, see what the time is. If it's coming up to the top of an hour, could be a fixed move. Any other time, well, it might be something different. I'll let Kay have a talk a bit more about the fixes if he wants to in a minute, but back to what we've got coming up this week. Not a lot for the rest of the day today, but tomorrow we get US consumer confidence and some house price data, and new home sales as well. So more housing stuff there, but that US consumer confidence could be a big mover. As always, we look at those inflation expectations that we'll see there. Then in the US on Wednesday, not an awful lot again. We've got some CPI, PPI from Italy. Those might be flash numbers for June, I think. And then over on Thursday, we get the economic sentiment for the Eurozone, which again contains some inflationary markers with selling price expectations and consumer inflation expectations. The CPI from Germany as well. That's at 1 p.m. So it must be the new numbers. So we should be getting the regional numbers on Thursday as well. And then GDP from the US. Is that a final number? Must be a final number, I think, from the US. Let's just double check. Yep, Q1 final. So that's probably not much to write home about. Be low impact unless there's a big move from that one. Further home sale data coming out on Thursday as well. And then into Friday, more CPI flash numbers, including from the Eurozone. So again, more big data to watch and trade, because we have seen that the market is moving a bit more on data now, as we saw on Friday after the PMIs. So data dependency trading is what we're firmly in. So they could be some decent movers on that front. Kay, do you want to talk a bit about what might go on this week with the end of month stuff?
Well, let me talk about the big lines, because we just spoke about it briefly on the chat with Mark, and I think they need to be revised a little bit, because we had those moves after the last quadruple witches. So no, but just in the big lines, what happens usually is that you can see there's a couple of parts going on end of month. So you have what they call the end of month stuff, where FX neutrals, asset managers need to rebalance their FX books on the back of equity and bond moves, and that usually on the equity side gives a roughly pretty okay or muddled picture, depending on whether the main equity markets have moved a lot. And then we have like usually the value date end of month. Today is a very clean this month quarter and half year end. And also, as Anne was saying last week, we got fiscal year end in Australia. It's going to be a pretty big one for one, and it's also going to be a clean one, because the last day of the month is on Friday, right? So we are going to start a clean month next week, so we don't have to start worrying what's going to happen over a weekend with those flows. But usually value date end of month, then you got like a little bit of US corporate interest as well on the dollar side. So there's a couple of parts. But in big lines, I would say, if you look at equity moves over this month and over the quarter and half year, looks to me like the main should be a little bit dollar defensive. But as I said, I need to revise it, because we had a 2.5-3% setback on the S&P, for instance, last week. So, but yeah, in the big lines, it's okay. We have to know though that end of quarters can sometimes be a bit messy because people will have done their end of months and perhaps rebalance a bit of the extra or not enough balances. So we have seen very strange end of quarters, end of half year. So but we should at least move because you've got the three things together: end of month, end of quarter, end of half year.
Yeah, yeah. And just for Sarkis' question, what do you mean by a fixed move before the close of a session? They start closing positions, taking profits.
No, it's not
yeah.
that, Sarkis. It's the fixings. We have one main fixing, which is the 4 p.m. London time, where most of the international, let's say, flows for month end, quarter end, end of year, whatever, are concentrated. But then, but they are based on what's happening in the equity markets and bond markets mainly. They are not driven by closing, taking positions. They are driven by what money managers have to do, because especially those who are FX neutral, meaning that if you invest $100 in being in a European asset manager, if you invest $100 in the United States, but you want to keep your investment at $100, imagine that the stock market goes up 10%. You're going to have $110. So you will they will have to sell those $10 in the FX market just to bring their overall investment level back to $100. That is the bulk of what those end of month, end of quarter fixings are.
Yeah,
and then you add a little bit of corporate stuff in there, but the main moves are driven by what's happening in the bond and the equity markets.
Yeah, it's a lot of imbalances getting balanced. You know, as you say, it's the same with investment firms. You know, if they have allocation of 60% of funds in stocks and 40% in bonds, and you get to the half year end and you've got, you know, an increase and you've got 62% in stocks and 38% in bonds, or, you know, can be even higher, then you need to rebalance back to your 60-40. So you see assets moving, and then, as Kay mentioned, you sometimes get currency imbalances with that, depending on where those investments are. So it's all about rebalancing into this time of year, can create people trading, and the fixes are where a certain rate gets set, where you then market to your books. So it's the WMR rate was the rate at the London fix. So then all your banks and your funds and whatever will use that rate to balance out those or mark to their books and whatnot. Can be a bit of a complex thing, but if you're in our chat room, the guys are well on top of it, Kay and ForexAnalytix and all the other guys, Mark. So yeah, we keep you covered on that front. Right, Kay, do you want to have a quick look around before we call it a session?
Yeah, sure. It's going to be a quick one today. I mean, and start of the week and also with a bit of uncertainty. So, right, let me start with gold. Do the metals first, and Stel, if you have anything to say about the metals, just perhaps give your opinion right now. But for me, we stopped on this trend line in gold. We had this sharpish move lower over the past week or so, but we stopped on the trend line, and it's also always good to have a nice market. Now we are back into this 1930s traffic zone. It's really a traffic zone. If you see that there's been really a lot of interest, a lot of interest, or call it actually a neutral zone with just people going in and out of what they have to do. I think we need to get back above 52, 55, or even 60. This 50-60 zone, if you start to get it back above in gold, then we're probably going to do a leg higher. But in the meantime, the risk is there for a retest. I'm not 100% sure what's to happen this week. We have a pretty heavy data week. We do also have, as we said, those end of month, end of quarter stuff, which may also impact metals books. So that's a bit of an uncertainty. But we also have a bit of US bond auction action going on, so there could be a wobble or two in those metals, in gold, in yields as well. But for as long as we're in this zone, I view this rather as a range. And I'm going to quickly talk about silver and then ask Stel's opinion about it. So silver, we came down to the low 22s, broken and slightly below the 61.8, but then we saw a bounce similar as in gold, perhaps a little less obvious what's going on here, because silver tends to move faster than gold if you look at it percentage wise. But again, neutral. I think we have to get back above 23, call it 2025, a bit more here at 35 to get going again. For as long as we can't recapture that, there's still a risk that we're going for a retest. But this starts to look at as a consolidation phase, kind of mid triangle or so. Stel?
Yes, I agree with you. Both gold and silver, especially gold looked like it might be breaking below those that relatively big support, but you have that trend line which exactly there, bounced off that trend line exactly. So I think we need. I still think it's a 50-50 that we go towards lower levels, and by lower I mean 1840, 1850 in gold. And maybe even below 22 in silver. But I think it's 50-50. But if we manage to close on a daily or even better on a weekly above, let's say 1935, 1940 in gold, which we're not that far away. I think that, yeah, we are almost on it. Yeah. So if we manage to close above, I think that this might have been a false breakdown in gold, and false breakdowns are usually bullish for the remainder of the move afterwards. I'm not 100% sure. I think yields have topped, and I said this last week on Face, and I think here as well. I think yields have topped. I find only a couple of scenarios where 10-year US is going to go to 3.94% and above. And those are some kind of a credit crisis or some kind of black swan event, or we start seeing inflation accelerating to the upside in the US, which I don't think is definitely not my base case scenario. So as long as yields have topped and the dollar is not going through the roof, which I don't think it has any reason to, I think that metals are now trying to find support. And also, another reason why I think this could be a short-term move lower for metals and maybe could be over soon is that there was absolutely no reason for them to be down. Now, silver was down 7% in 2 or 3 sessions, and there was absolutely no reasons. Yields were not going anywhere. The dollar wasn't doing anything. It was just a targeted move on silver. Okay, gold got taken with it a little bit. So when I see something like that, I'm asking myself, why does this happen? Why was there a sell order, which I think took 6 or 7 minutes to be executed during Asian trading, which was roughly the same as, in terms of dollar terms, the annual production of physical silver in the world. Why would anybody want to do that? And why would anybody want to execute it in that way? So when I see moves like that, I start thinking that this is an effort to produce a result, and the result has been made because, let's face it, we had the big move lower in both metals, but this now has a risk of becoming a false breakdown. I still think it's 50-50. If we do, as I said before, if we do close above 1935, 1940 in gold, I think then that is it for this move. And with yields not going higher, I think it's only a matter of time before gold breaks above in 1985 and then all-time highs. So
it's interesting to talk about yields, and I haven't been really seen a lot because we are starting to stabilize as well. I think what either we get a new driver for yields, a big driver which is going to be economic, but I reckon that the possibility for it to go higher is if the US Treasury, all else equal, if the US Treasury doesn't find enough buyers for their bond auctions, or the bond sharks make them pay up, then we can have like those spikes that we see sometimes over bond auctions. And that may be the reason why we are going to see extra spikes. I mean, and we have to differentiate, for example, the short end and the longer end. Perhaps those twos, they can go a little bit faster than the 10-year, for instance, or the 30-year, which is been relatively quiet of late. But those can be reasons why those we see yield spikes. The thing is that we have seen, and Powell acknowledged it as well, we have seen the reverse repo market starting to lose some of those hefty reserves in there, and money market funds seem to be willing to give some liquidity to the US Treasury for now, because it's always and you talked about it, and we talked about it earlier. It's interesting to start to buy bonds, because for years and years and years you had absolute 0%, and now you've got like 3.75%, 4%, even 5% in some return. So people will be interested to go to those auctions, at least in the first leg. But what may see a spike is once those money market funds, once those RRP reservists, if they are happy with what the US Treasury is paying up now, they will go to those auctions. So we could be in another period of stability and the real economic data take over. Yeah, Stel, please reply to Richard.
Yes.
Yeah.
So Richard, yeah, I saw your question. What happens is when you join the TFP, if you have an existing ForexAnalytix account, we add the month's access to your account. If not, we create a new one. Please go to our site, either the TFP site or ForexAnalytix site, use the intercom button at the bottom right, ask for Max, and he will help you with that. I want to get this resolved for you today, because I can see that it was added to the account. But anyway, go there, ask for Max, and he will take it for you, okay?
Right.
Yes.
Thanks, Laura. That's very kind words of you. All right. Short term, yeah, euro dollar neutral here. Even though we've seen a bit weaker data, still a bit of ECB effect, and we're turning around 109 the figure now. I tried a little on this morning, bit short again, but I'm not sure whether I'm going to keep it, because it looks like really a flip the coin around here. We have, but this is really short term. We have this bit of negative, bit of a trend line over here. But to me, this looks negative. For the euro to really start to move, we need to get back below 108.65. Then we have a chance to perhaps test the 108. And on the top side, if we start to go back above 109.20, 35-ish, this one is starting to get really watered down. But anyway, I'm still keeping it there for now. 109.20, if it goes back up, then we're probably going to creep back up towards 110. So that's the situation right now. Again, we're entering this end of month, end of quarter, but we do have interesting data out this week. So they can, in between the raindrops, they can create some other moves. Cable supportive for as long as we're above 126.80. I think really supportive for as long as we're above there. If we start to move back above 127.70, 65.70, then we probably can push on a little bit. But also there, and then we come back to what Ryan said earlier about those hourly fixings. You have to know that the main one is 4 p.m. London, but we have hourly fixings in London every hour of the morning, and especially the morning fixings. We can see some activity, especially in the European currencies, and sterling is one of them. So don't be surprised if running into the top of the hour, we see some funny moves on sterling, for instance. Perhaps today a little early, but from tomorrow, Wednesday especially, then we can move nearly every hour. Mostly they are done around 12 noon on the sterling, and then we wait for the 4 p.m. So that's another bit of insight on how fixings work. So 126.80, 127.65.70. I'd say keep those two and in mind, and then see what's happening there. Euro sterling, very undecided on the Bank of England, as we saw, and after the CPI. But what we can see here is that euro sterling around 86.35 is capped. And I spoke about this 25.35 level already a few times. We've got this bit of a trend line over here as well. That's really going to be your key area. But again, since we are end of month, quarter, whatever, if we ever would have a move end of the week, which takes it over there, maybe it would be an absolutely perfect counter trade. We will have to see that. If we go above 86.60 in a natural way, then probably we're going to go higher. But I'm going to keep a very close eye on what's happening on sterling flows, especially in the mornings. If euro sterling can creep or is bought because of end of month, end of quarter, perhaps this is going to provide a bit of an opportunity, because in the meantime, we can only note that this is looks to be on a slide, right? It holds this trend line, but it's a bit steep for my liking. So 85.40 is the level right now. And then on the daily, I have an 85.10 in there as well. I think that in a natural way, this could actually go and test 85 at some stage. Dollar yen is still 143, 60, 70. We did go a bit higher, but it does seem that this trend line, we could call it a false break, but I mean, if you start to look at a managed currency with the MOF inside, this is going to be a bit of a sport event rather than a technical event, I think, into the end of the month, quarter. See where we end up. But if we get interventions, then we're probably looking at 141 and 140. In the meantime, I do think that if you look at pure central bank divergence and at what Ueda has been constantly saying, I don't see too much of a fundamental reason to be long yen right now. Euro yen still massive level around 155. Keep that in mind. 155 figure a quarter, massive. If ever we start to close below on a weekly basis, this is the party may be over. But is it going to come via interventions? In that case, you can throw it away and see where we end up after the interventions, first of all, okay? Aussie, I had an interesting level here on the Aussie. Aussie, 66.55-ish, 55.65. I think that's a good enough level to watch here. We're really close on the Aussie here. We've also seen a big setback actually in the Aussie Kiwi. So I think there's people trading quite a bit of Aussie Kiwi in the market right now. But keep an eye on this 66, 55, 65. Top side 67.25, 40 is again going to be the level. On the Kiwi is less obvious, but we are back below. We're back below the 61.90 figure here, which has always been a bit of an area where the market wants to trade around, and we went back down to I had this somewhere here. Here we went back to the 23.6 around 61.15.20. That is your level to watch. I think this one is for the bin. This is the one to watch to the downside, I reckon. And last but not least, and that's where Gerrit was looking at. Yeah, but if you look at the if you look at the channel, I think it's such a steep channel that I'm a bit reluctant to really hang my hat onto it. This being said, I have it in the 725 and 725 and a half, 3/4 zone on the dollar China. And then again, yeah, resistance about here, prior tops around 728. Perhaps time to reflect a little bit. If we get back down below 716 from here, the party may be over. And I think already 719 is a good enough area to watch now, if you want to be safe. If you want to be very safe. And I'm looking at the clock. This is enough for today, right, Ryan?
Thank you very much, Kate. Thank you very much, Stel. Hope we got you guys and girls set up for the week ahead. Plenty to happen this week. So please tune into the Flow Show for the rest of the week. And don't forget to give us a like on the old socials. Spread the word of what we do here. And yeah, have a great day, everybody. Have a great week. We shall see you all tomorrow. Thank you very much.
Ta-ta.
Toodles.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.